According to New York Times, no overseas market is more important to Hollywood than China, which is poised to overtake the United States and Canada as the world's #1 box office engine. Disney has even more at stake. The Chinese government co-owns the $5.5 billion Shanghai Disney Resort, which Disney executives have said is the company's greatest opportunity since Walt Disney himself bought land in Central Florida in the 1960s. And Disney's Marvel franchise has been extremely successful in China. Iron Man, Captain America, and Avengers brought billions of revenues. However, this May, China's CCTV movie channel aired a list of the US release dates for 8 of the 10 scheduled movie titles. But somehow, Eternals and Shang-Chi were left out. That could mean Shang-Chi and Eternals may not be released in China. Allow me to give you a very quick overview of how foreign films work in China. According to US China Today, there are 3 systems foreign filmmakers can enter the Chinese film market. The first one is a revenue sharing system, and the foreign film studios receive 25% of the box office revenues, and currently, China allows the screening of 34 foreign films each year, and many of which are produced by Hollywood. In 2018, there were 42 revenue-sharing foreign films imported to China, despite the official quota 34. The second one is a flat fee system. With this system, foreign film studios basically sell their films to the Chinese government with a flat fee. And the film studios would not get any profits from the Chinese box office. And in 2015, there were only 29 flat fee films. In 2018, this number had increased to 77. The last one is to co-produce with Chinese film companies. Producers must follow strict guidelines, including locations and a cast. And many of the scenes must be filmed in Chinese cities and include Chinese actors. And on top of all of this, there are also guidelines for censorship that filmmakers and producers need to follow. Many film studios revise many times to meet the prerequisites for screening in China, and some companies censor themselves even before sending the films for approval. Currently, it is unclear the exact reasons why Shang-Chi and Eternals were left out. The character, the Mandarin, in Shang-Chi is under the shadow of Fu Manchu, a master poisoner, chemist, and a cunning member of the Yellow Peril. He is a mysterious villain. He always sends his minions to commit crimes for him. He doesn't like guns or explosives, and usually uses pythons, cobras, spiders, fungi, and other peculiar animals or natural chemical weapons. And on top of that, he uses torture and other gruesome tactics to dispose of his enemies. So this character has caused huge controversy in China. He is super evil, and it doesn't make Chinese people look good. Is this the reason? I think this could be one of the reasons, but The Mummy 3's main villain is the Dragon Emperor Qin Shi Huang, and he is not very kind either. For that, I think it got banned just because of the main villain in the movie is unlikely. I think there are other elements in the movie that didn't follow the guidelines. As for Eternals, again, there's no hard evidence that a ban will take place or reasons come with it. Backlash against the China-born Zhao exploded after her Golden Globes win for Nomadland in late February due to the circulation of 2 quotes that many perceived as being anti-China. The first quote from a 2013 interview found that she was discussing her interest in movies about the American heartland and saying, quote, "It goes back to when I was a teenager in China, being in a place where there are lies everywhere," end quote. The second quote was a misprint that found Zhao claiming that the US is now my country, even though she had actually said the US is not my country. Regardless, the incorrect quote went viral and added fuel to the nationalist backlash. Some reports said that Chinese media reacted her Golden Globes win in silence. That is not true. China Central Television Channel 2 and TV.cctv.com both show a 1 minute and 30-second video clip of her winning the Golden Globes. So should we worry about Disney's stock when 2 of the Marvel movies are not going to be released in China? I don't think so. I think Marvel is the successful model of the US film industry in China. Disney's mega blockbuster Avengers Endgame has grossed more than $629 million in box office in China, whereas globally it has grossed a record-breaking $2.79 billion. On top of that, I think Disney parks are going to look amazing post-pandemic. There will be new characters and intellectual property heading to the parks, and the new technologies that will make the experience even better than it was before. According to Disney Parks chairman Josh D'Amaro, a new reservation system is in place where people are having a much easier time finding places they want to eat and have experiences that allow them to spend more time in parks and with their families. Furthermore, Disney said its parks, experiences, and the products division returned to profitability for the first time since the pandemic began. Yet during an earnings conference call on August 12th, CEO Bob Chapek said he's bullish on the theme park's future, noting that current reservations are above third-quarter attendance levels. And the revenue at Disney's parks, experiences, and the product segment jumped 307.6% to $4.3 billion, up from $1.06 billion during the same period last year. And don't forget about Walt Disney's streaming services. It has excellent growth. Netflix currently has about 210 million subscribers, and Disney has about 174 million subscribers. But at this rate, it's no doubt that Disney's subscribers are catching up with Netflix's. In addition, Disney's streaming services are more affordable than Netflix's, and Disney probably has more long-term revenue potential from its streaming business because it has made room for advertising in its business model. Sure, Disney Plus is ad-free, but the company packages the service in a bundle with ESPN Plus and the ad-supported version of Hulu, and it's always trying to upsell Hulu customers with Hulu Live. With this strong momentum and contents with ads, I believe its streaming business could really surpass Netflix in the future. Disney also acquired 21st Century Fox, and the merger was officially completed on March 20th, 2019. You can now find titles not just from Disney-related brands such as Marvel and Pixar. You can also get titles from Fox-associated brands. That means you can watch Avengers, Die Hard, and Star Wars on the same streaming service. Analysts are also bullish about near-term growth of Disney. Michael Nathanson of MoffettNathanson forecasts Disney's direct-to-consumer revenue will nearly triple from $16.5 billion in 2021 to $46.6 billion in 2026. He believes this because he says there will be a massive ramping in Disney Plus subscribers and pricing power in high revenue per user markets. Needham and Company's analyst Laura Martin maintained a hold on the company's stock, and she liked the most about the latest quarter was the performance and the Disney's direct-to-consumer business, which is the cornerstone of Disney's CEO Bob Chapek's corporate strategy. Disney is currently trading at $181, and Macquarie Capital analyst Tim Nullen raised its price target to $210. With all these great numbers and the different types of businesses and merchandise Disney has, I am also bullish on Disney for the short to midterm. I still have reservations for my long-term strategy. So in conclusion, is Disney stock a buy right now? Let's see. New CEO, acquisition of 21st Century Fox. Some of the parks reopened. Disney Plus continues to grow. Bullish analysts. These are all great things. But according to IBD Stock Checkup, Disney has a 43 composite rating, which combines key fundamental and technical metrics in a single score. Based on that rating, it remains in the lower half of the 21 stock media diversified group. So all things considered, I think we can buy a smaller number of shares on the rebound, but we need to watch and see if the stock goes back to the 170 support. I think the proper breakout is still at $203. If it breaks through that, that's the proper buy point for me. Thank you for watching. If you like what you see here, please hit that like button and subscribe. This is Grant. Trade and invest responsibly.